What's up, everybody, and welcome back to my channel. It's been a while since I've been uploading on YouTube, and I'm going to be bringing you back some more real estate related content. This channel is going to be where I keep you up to date on everything real estate related. So whether you're a first-time home buyer or an investor or just somebody who loves real estate stories in the Denver area, this is for you. So I'm Brooks O'Hearn, and I'm a realtor and a local investor here in Denver. And today we've got an awesome lineup for you. Every single week, I'm going to be bringing you guys some different topics. We're going to be talking things like market updates. We're going to be talking certain case studies in real estate transactions that I've seen. We are going to talk about some weird and really expensive real estate purchases along the way. We're just going to be having a lot of fun together. So what I want to do is bring back some YouTube content for you guys, and I'm excited to restart this channel. So let's dive right in. First and foremost, let's talk about what's happening right now in the Denver real estate market. As a lot of you guys may have seen, the topic that is dominating the conversation right now is the rate cuts by the Fed. And first off, let's talk a little bit about what that actually means for you in real estate, or what that might mean for you in the future. Wherever you are, it could have some repercussions for you, or some effects for you. Doesn't necessarily have to be specific to real estate, but let's talk about it. So first and foremost, rate cuts by the Fed does not equal mortgage rates. There are a lot of other economic factors that go into mortgage rates, and it has to do with economic factors like unemployment and demand, just purely demand for mortgages, whether that turns into a mortgage rate cut or a mortgage rate increase. And a lot of that ebbs and flows based on how the market is going, doesn't necessarily equate to the Fed cutting rates. So you might have seen that the Fed cut by 50 basis points last week. And a lot of people are screaming from the rooftops that, hey, this is a great thing for real estate. This is a great time to buy a house. Other people are saying this signals something deeper and darker in the economy, and maybe a recession is right around the corner, or maybe it's already here. Kind of depends on who you ask. My personal thinking is I'm a little bit more nervous than I am excited. The fact that they cut 50 basis points. And you'll hear a lot of lenders and a lot of real estate agents say, oh, great, now's the time to jump in before everybody gets back in the market. Well, there's a lot of other factors, like I said, that go into that. And I'm going to break some things down that I'm seeing in the market reports every week, because I do track that every single week for market reports. A lot of realtors and mortgage brokers love to put out those monthly reports, and they love to share month by month statistics. Well, I like to watch it week by week to see a little bit more of the changes in the market. So that is the first and foremost thing for rate cuts and just what to expect right there. So what we are seeing also is increased opportunities for buyers. A lot of people realize this, and this has been going on for months. Right now, a stat that really stood out to me, there are 2.5 houses available on the market for every one buyer. So what that tells me is you've got to have a good product. You've got to be priced right, because ultimately, if you put yourself in a buyer's shoes and they're out walking, usually they walk 3 to 5 houses a day. You call your agent and you schedule some showings, and they look up, 3 to 5 properties, maybe in a specific area, or you hit multiple areas, depends on how that agent works. But what that means to me is if they're looking at 3 properties during that day, you're not going to have we're not going back to the times of 2020 or 2021 where maybe it was a little more like 1-to-1, or maybe there were more buyers in the market per house and you got a lot of bidding wars. So right now, what I'm seeing is you've got to have a good product. You got to have it priced right. you have to have it marketed well, and you have to have it show ready. And that speaks directly to a lot of investors. I mentioned, and a lot of you guys know that I am an investor myself, and I've personally bought millions and millions of dollars worth of property, and also resold millions and millions of dollars worth of property. So I know what it takes to show a property correctly, get that on the market, and get it to look its best. If you're an agent out there, it's time for you to start looking at some other memberships or some other marketing tools, where maybe you didn't have to do that in recent years. And a lot of agents that I talked to that were just new in the market, maybe in 2019 or 2020 or 2021, if you came into the market and just got your real estate license at that time, or if you just started buying investment properties at that time, you kind of got a false sense of what the real estate market in Denver looks like. And you could make some mistakes along the way and maybe still get multiple offers. I'm here to tell you guys that those days are over and they're not coming back. So, they may come back in a decade, but a lot of people are going to be in and out of the business before that decade mark hits. We're just not going to see that. We're just not going to see that, where you could pay almost whatever you wanted for a property and then make some mistakes and overspend along the way during a flip. I'm specifically talking to those investors that like to flip properties. And you could make some mistakes along the way, and the market would help catch you up because it was appreciating at 1, or we even hit some points where the market was appreciating 2% per month, and that's just not the case anymore. So one thing, another stat that stood out to me in the weekly report earlier this week was a little bit of shock to me. Usually at the end of August and into September, what we see is a decrease in buyer activity, a decrease in showing activity. And what we see this year is a little bit of an increase. And what that's meant is just a slight reduction in inventory. Obviously, you've got a lot more inventory on the market year over year, but not a lot of people are looking at it month over month. And so into August, or excuse me, at the end of August into September, what we were seeing is a slight downtick in inventory available on the market, just by a couple percent. I think it was like 3.5% fewer homes on the market than there were a month ago. So pay attention to those things. That's definitely a little bit of a shock, a good shock. Usually, like I said, seasonality, as school gets back in session and the summer winds down, usually we see the market start to slow down just a little bit. This year we haven't seen that. It's just been it's a little later than we thought. And maybe that is due to some renewed excitement. I think everybody seems to be eyeing the upcoming election. And another thing I like to do on these breakdowns, when I talk about the market, I don't want to just break down like, here's your stats. Let's break down what it means for you guys, right? And whether you're an agent or whether you're an investor or whether you're just a home buyer or a homeowner and you want to know kind of what's going on in the market. Maybe you're considering selling in the near future. Right now, everybody seems to be eyeing the election. No one's really sure what it's going to mean. We always know that an election year can mean big things or can be a pivotal moment in real estate. And this year, in talking to people, it seems that everyone, no matter which side you're on, everybody believes that their candidate that they are backing or that they would like to pick, their candidate will be strong for the economy and they have a good outlook. And pretty much no matter what side you're on, you think the other candidate will be bad for the economy and maybe bring a bad outlook. So time will tell on that one. If you are purchasing an investment property right now, it's time to make sure you are padding your numbers a little bit. A couple things that a lot of investors don't take into account. They don't take into account that maybe maybe my ARV or after repair value is going to be just a little bit lower than it might have been when you bought the property, especially if you're holding those properties for 3 or 6 or 9 months. Hopefully you're not holding it for that long on a flip, but sometimes they are. It's important that you're padding your numbers. If you are fixing and flipping properties, then you also need to be prepared for a potential seller concession. Those have been around now for quite a few years. It's been very popular to help buyers buy down their rate and ease some of that pain on the higher interest rates, and help some affordability in the housing market over the first couple of years of home ownership. And what not a lot of people are doing is they're not taking into account the fact that we, at the end of the project, might have to offer a 1 or 2% concession to a seller, and or excuse me, from a seller to a buyer. And I think when you look at that and how that changes your numbers going into a project, you need to be prepared, because otherwise, a lot of people right now that are calling themselves investors because they might have just went to the local guru on the weekend showcase. You need to be aware of that, and if you're not counting that, that could potentially be tens of thousands of dollars on every single project. That's just not profit. And so you need to be ready for that. Landlords, if you're purchasing long-term investment properties right now, you need to make sure that you are having the major systems up to date. I'm talking furnace, water heater, air conditioning. Make sure you're running home inspections and understanding what you're purchasing, because those can be big ticket items that you might not plan for those expenses, and B, those could potentially be a very troublesome issue with tenants as they rent your property. And you don't want the tenant to move in and then all of a sudden they don't have AC, or they don't have heat, or they don't have hot water, right? That sets things off and really takes a damage to your reputation and to the property itself. So one last final thought for short-term investors is, if you're fixing and flipping, buyers are looking for properties that have had permits pulled, they've had quality workmanship. I'm talking about the finishes. So a lot of people, they don't take care of those final finishing items, and I'm talking about just the little touch-ups, the punch list items at the end of a project. And we'll get into this more and more as we talk on this channel. But if you are not taking care of those small things before you hit the market, you're going to be in big trouble. You're going to be in big trouble because buyers will not see a quality product. And if you didn't pull permits, that also is a red flag to a buyer that it's not a quality product. Right now, it's easy for them to move on, and it's easy for them to go look somewhere else in the market. So you need to be taking care of those things, and the quality products are selling quickly. And I'm seeing it every single day in the market. Investors that put a quality product out, that price it correctly, it shows well, they took care of all the major things. Those properties are selling on the first weekend or the first week still. And others that don't necessarily do that, you're sitting for maybe a month or two. I just also, something I'm keeping an eye on is commercial real estate. And if you've been paying attention nationally, commercial real estate is kind of down. We're not even going to sugarcoat it. It's down, right? Office buildings are taking a huge hit. Cap rates are going up, which means prices are going down. And let me just read to you some of the headlines. We'll talk more about this later, but let me just read you some of the recent headlines within the last week. Okay. And this is not, clickbait or anything like that. These are true headlines. I will dive deeper into every single one of these later on. For instance, all right, Lone Tree office building sells to a local buyer at auction for half off. Okay. So the lender took a hit. The previous owner took a massive hit, and the current buyer probably bought at a pretty good rate for the current today's market. Colorado Mills. A lot of you guys know this mall out there on the west side of town. Colorado Mills Mall loan sent to special servicer ahead of expected default. Now, their loan comes due in November. We'll be watching this one really closely. Their loan comes due in November. And right now, what a lot of commercial real estate investors are seeing is they didn't price in the fact that in 5 years of ownership, maybe they bought back in 2019 or 2020, and 5 years later, that loan is now maturing, and the principal and interest payment is going to go up by 2 or 3x based on, the new interest rates and new insurance rates and things like that. So nobody's pricing that in. All right. Let me get down here. Let's see. Another one, $20 million loan on DTC office building in foreclosure, finally sold. Lender pursues apartment project after taking back Colfax office building. So the lender took the building back and now they're switching it over. So those are just some headlines to share about commercial real estate that's really, really taking a hard hit right now. So if you're in residential real estate, maybe reach out to your friends and do a welfare check on them, see if they're, your commercial real estate friends are still in a good place.